With the Ellis team at RE/MAX, it's a family affair. Always call the Ellis team, they'll handle you with care.
Welcome to the future of real estate. I'm Brett Ellis of the Ellis team at RE/MAX. You can always reach us at 239-489-4042 or visit our website, which is topagent.com. There you can search the entire MLS. We've got another website at swflmls.topagent.com. But basically, if you just go to topagent.com, you'll find everything you need. There's links to it all right there. We've had a busy season. We were really busy. We haven't done a video update since January, and we told you we thought we might have a busy season, but we sure did, and it's been long overdue getting this market update out to you. But now we're in the May Southwest Florida real estate market update, and I want to share with you a couple graphs here. We're going to talk about inventory, pricing, and whatnot, so let's get to it. To get an overview of what's really going on here, the first thing we might want to look at is what is the local inventory doing? You've heard the old adage, supply and demand. Well, supply is going down while demand is going up. Of course, we're in the height of season, or we just finished the height of season here in Southwest Florida. But our inventory was at 6,215 in January, and it slid down to 5,900 in March. That'll probably go down again in April. That's not uncommon. Look at last year. We sat about 6,434, and those numbers were light. So we're even lighter than that. But those numbers come down as we work our way into higher sales. When I say higher sales, I'm talking about volume of sales. So our inventory's been going down, and what that's done is that has pushed prices higher. So we've got, the economy picking up a little bit. We've got low interest rates. People are coming down here in season, and that's what they did. If we look at our median sales price, and by median I mean half the sales occur under a certain point and half occur over a certain point. We were sitting about 140,000 in December for median, and it stayed 140,000, but then it shot up to 153,890 in February and even 168 in March. Now the average sales, which is just throw them all in a hat and average them all out, they tend to be a little more volatile, but they tend to be higher and whatnot. Those numbers were at 215 in January. They shot up to 269, almost 270 in February, and settled back down to about 253, 380 in March. We expect these numbers to ride high here for the next few months as, the April, May, June closings, those tend to be closings that occurred in March and April and that sort of thing. And it's, every season those numbers will ride a little bit higher. So we're expecting high numbers here for the next few months. And then we'll see how summer settles out. We expect them to drop a little bit just because we don't have all the visitors here and they tend to buy normal properties instead of the higher end properties, but we still think those are going to be higher than they were last year. Now I want to take you over inside the numbers a little bit. Let's look at closed sales by price. Homes less than 50,000 were down about 62%. The reason is those homes have graduated. Picture a high school graduate or maybe a freshman, sophomore, junior, senior in high school. Those freshmen are graduating up to sophomores in the next year. There isn't an incoming freshman class. So those listings, those sales are down because the listings are down. The 50 to 99, those that were on the market a year or two ago, those same homes would be in the 100 to 150 or 150 to 200. So it's quite natural that these sales are going to be down because those homes aren't there anymore. They've graduated. So we've seen the biggest increase in sales in that 200 to 250 and that 250 to 300, and then it falls off a little bit. What we don't see a big increase in is the $1 million or more sales. Last year, we had about 12.1% more sales in that upper end range than we did this year. But a rising tide lifts all boats, and eventually we'll get there. The problem is there's probably a lot more $1 million sellers that would like to come to market but haven't because they just don't like where the markets are. Let's finally look into, for this market report, let's go down to how the sales are breaking out. This is interesting. If you look at the traditional sales market, and by that I mean just a normal seller, not a distressed seller, those sales are up 8.2%. So it's a no wonder prices are going up because we're seeing more sales, and they tend to be in the higher price range. The median price in March of 2013 was about 188 compared to 172 last year, so up 9.5%. But look at this over here. The foreclosure market is down 34.5%. There's 34.5% less sales. So
It's also putting upward price pressure on the foreclosure sales. Those are up almost 19% in price. And then the short sales are down a whopping 45% over last year. What's happened to that? That's caused upward pricing pressure in those almost 43%. So we have the lack of distress sales, which is helping buoy the entire market. We're getting pulled from the top because the averages are being pulled, and we're being pushed simultaneously from the bottom because the distress sales aren't there to even sell. If they were there, they would probably weigh down this market, but that's not what's happening.
So as you can see, we've got some exciting times down here in Southwest Florida, which is kind of nice because after 2005, 2006, we were in a declining market there. 2008, 2009 was kind of bad. And it was a good opportunity for buyers, especially investors, but we've really come up out of that now, and local residents are actually able to start selling now, which is kind of nice. A lot of them have told me, the ones that weren't foreclosed on or did short sales, that they felt trapped in their home, almost like in prison. And we have a lot of people that like to make lateral moves, or maybe go from a home to a condo, or from a boating community to a golf course. They weren't able to do that for about 6-7 years. We're starting to see that again, so that's kind of nice. That's refreshing. If you're a seller and you'd like to sell, our marketing is working. There's not a lot of inventory on the market, as you've seen. Now's probably a pretty good time to sell, unless you still owe just a lot. But we can look into that. We'll sit down and share with you what your options are. If you're a buyer, prices are on the move. So if you think about moving down to Southwest Florida, you're probably better off looking at it now versus a year or two from now. We started telling people about a year or two ago that prices, we think, had bottomed in 2009, and they were going to march up from here, and that's really what's happened. And maybe in our next video we'll go back and kind of share with you where prices have been since 2009. But there's some good opportunities for buyers. There's opportunities for sellers now to unlock the keys and get out of those properties. So it's kind of we're returning more to a healthy market, more of a stable market. And we just had the announcement here, the Lee County Board of Commissioners just voted on a $4 million incentive package. We've got a Fortune 500 company that's looking to relocate over 700 jobs here at the average salary of $102,000 per job. It's a company, they say, out of New Jersey. Wouldn't be surprised if it's, it could be Hearst, but it could be like Johnson & Johnson. We're going to have some news for you, I think, next week. We've got a list of about 10 companies that are Fortune 500 that are in New Jersey. But regardless of the company, it's exciting that 700 companies or 700 jobs could be created here. Almost a $750 million building or complex of buildings, and a $102,000 average salary for those 700 jobs. It's exciting. You put that together with what we've just shown you in our real estate market, I think we're in for exciting times here in Southwest Florida. Don't forget our website, topagent.com. Only real estate website you need to know, or you can always call us the old-fashioned way. We love to help people that way too. 239-489-4042. You've been watching The Future of Real Estate presented by the Ellis team at RE/MAX. Thanks for tuning in.
With the Ellis team at RE/MAX, it's a family affair. Always call the Ellis team. They'll